As the United States gets ready to spend nearly 20% of its gross domestic product on healthcare, and as healthcare costs outpace inflation, healthcare stocks are in the limelight right now. So in this week's edition, we're going to compare two different stocks to see whether you should buy or not buy them, or if you already have them, hold them in your portfolio to see if these could benefit you. Now, if you guys are new to this channel, my name is Jared and I post helpful biz tips and tricks each and every Friday on helping you with financial freedom through real estate, investing in the stock market, and personal finance. If you learn anything from this video, make sure you hit the subscribe button and hit the notification bell so you are notified each and every Friday when I post helpful tips for you in gaining financial freedom and building your wealth. In today's comparison, we have the UnitedHealth Group Incorporated and Johnson & Johnson. We're going to see which one benefits your portfolio more. Let's get into it. Now, the first one we're going to talk about is UnitedHealth Group Incorporated, which is the ticker symbol UNH. They're in the health sector and located in Minnesota in the United States. The UnitedHealth Group Incorporated operates through four different segments. The first segment, being the United Healthcare, offers consumer-oriented health benefit plans and services for national, public, and mid-sized employers. The Optum Health segment provides access to networks of care provider specialists. The Optum Insight segment offers software and information products, advisory consulting. The Optum RX segment provides pharmacy care services and programs, including retail network contracting. The CEO of this company is David Scott Wickman, and if you want more information on them, you can go to UnitedHealthGroup.com. Now let's look at some of the stats on UNH. Now, the market cap on this one as of the 2019 annual report is $254.1 billion market cap. Shares outstanding is roughly 948 million, with the average volume on day-to-day trading about 5.4 million, which is pretty decent. And the next earning report is going to come out on April 15th, so stay tuned for that if you have them on your watch list. Now, UNH does offer a dividend, which is quarterly. The yield is about 1.74 to 1.61%, which is pretty stable and growing because you always want to see a company like the NASDAQ list here showing that it increases over time, which is always good for dividend collectors. The annualized dividend is $4.32, and the last ex-dividend date is March 13th of 2020. The dividend payout ratio is 28%, which is pretty decent, which means that there's room for the dividend to grow, and the company is reinvesting into itself a little bit more, which is awesome to see as well. Now let's go ahead and look at the balance sheet. The cash equivalents at $10.9 billion, which is looking pretty decent. Is growing kind of steadily. There was a little drop in 2017 to 2018, but not too big of a deal. So the total assets being about $173.8 billion, which overall is pretty decent. That has been growing year over year, which is great to see. Current debt has been dropping since 2016, and total liabilities being $113.4 billion, which overall is pretty good. Total liabilities is less than the total assets, which is always great to see. Now, taking a look at the income statement here, looking at the breakdown, we've got a total revenue of about $240.2 billion, which has been growing year over year. Great to see. Cost of revenue is also going up, which is to be expected. Gross profit is also increasing, which is great as well. So we've got a total operating expense of about $37.9 billion. That's okay. Net income is about $13.8 billion. So that's looking pretty good. That's growing year over year. So as far as they are looking with cash and revenue, this is looking pretty good for them. You always want to see a steady increase over time. So there's definitely some good news on this income statement. Now, the number of employees at UNH is about 325,000, which is pretty good because that's been rising each year. So you always want to look at companies that are expanding, and a way you can tell if they're expanding or not is if whether or not they're hiring more employees. Let's look at the insider buying and see if there's anything like that going on here. Now, if we look at the insider trading volume, you can see that there's been a number of shares sold versus shares bought in the last year or so. So we can take this one of two ways. One being that the shares that are being sold are being done for liquidity purposes and just being able to have quick cash on hand from these insiders, or you can take it as they know something we don't know and something is about to happen to the company. So depending on your risk tolerance level, we'll kind of just keep that in mind. And you can see here on recent insider transactions that there have been more selling in the last couple months or so, especially in 2020. During this time. Now, if you take a look at the 5-year chart here, you can see that the stock definitely is growing over time, which is a good thing. In the mid of March, there was a good buying opportunity here where it went under $200 going back to 2018 pricings. So overall, this is looking pretty good. Now the question is to buy or not to buy. Now, as far as Zacks rank system is concerned, this is a number 3, which is a hold if you already have this stock. I wouldn't personally buy this one for the dividend, but this one does have good growth future potential. Now moving on to the next one, which is Johnson & Johnson, ticker symbol J&J on the New York Stock Exchange. They're located in New Jersey in the United States, and they are in the healthcare, more specifically pharmaceuticals and biotech branch. Johnson & Johnson researches and develops, manufactures, and sells various products in the healthcare field worldwide. It operates in 3 segments, which are consumer, pharmaceutical, and medical devices. Now, as of late 2019, the company has about 132,000 employees, and the CEO is Alex Growski. Alex Gorsky. Alex Gorsky. Now, some of the stats on Johnson & Johnson are $372.3 billion for the market cap. Shares outstanding is just about 2.64 billion shares. The average volume is $11.7 million. And the next earnings report should be around April 14th, so make sure you stay tuned for that one as well if this is on your watch list. Now, Johnson & Johnson is currently offering a dividend, which is quarterly, yielding at 2.69%. They are stable and growing over time, as you can see on this log here of history growth. And the annualized dividend is $3.80. The last ex-div date being February 24th, 2020. The payout ratio was a little bit tough to find. On Seeking Alpha, it's about 46%, 66% on Simply Wall Street, and 66.1% on Yahoo Finance. So I'm going to go with Yahoo Finance and Simply Wall Street being 66%. Now, if we look at the balance sheet of Johnson & Johnson, we can see the cash equivalents are looking pretty good. Not a year-over-year increase, but still at $17.3 billion. Still looking pretty decent. Total current assets coming up to $45.2 billion. So overall, total assets, including the non-current assets, are $157.7 billion, which looks pretty decent. If we go down here to liabilities and we look at the current debt, it has been going down slowly over time, which is always something great to see, that they're killing off debt. We can see that the total liabilities, all in all, have been rising over time, but at 98.2%, it's still pretty good because the debt is under the current total assets. And they're looking to kill off debt, which is pretty good, so I like to see that as well. Now, looking at the income statement, we've got the total revenue kind of going up from 71.8 billion to 82 billion, which is pretty good year-over-year increase. The cost of revenue is also going up as well, but the gross profit as well is going up. So these are all great signs to see on the income statement. We've got total operating expenses coming about 34.4 billion, which is increasing year over year as well. But we also have a net income there was a big hit in 2017, and now it's coming down to about $15.1 billion as far as the cash flow from this company after all expenses are paid. Now on Robinhood, this is listed as a 74% buy, and on Zacks rank system, this is a number 3, which is a hold. Now this one does have a better dividend. However, the growth aspect of this stock wasn't really looking quite that great if you look at the chart here. Now, I'm not the greatest fan of this 5-year chart. It has been kind of bouncing around the same price as it's been for the last 2 years since 2018. If you look at the year chart, there was some good buying opportunities if you did want to get into it around the March-February time frame. But overall, if you're still looking for growth, this is still one of the good ones to pick up. If you look at the overall chart, you can see the timeline since the 90s. This stock has been growing over time. So depending on your needs and what you're trying to do with your portfolio, this could be a pretty good choice for you. Now, all of this information that I've gathered for you today is from Yahoo Finance, Robinhood, Simply Wall Street, Seeking Alpha, NASDAQ, and Zacks. Before you go out and buy them yourself, make sure you do your own due diligence before you invest. And hopefully after the information of this video today that you've learned, you can make a better informed decision for yourself and your portfolio. Thank you guys for watching, and let me know your thoughts and ideas on the 2 stocks that we talked about today in the comments below. Now, if you don't have a brokerage account already and you're looking to get started, make sure you check out the referral links down below in the description. There's one for Robinhood for a free stock and Webull as well for a free stock. Make sure that you just deposit $100 and get started in your wealth building on one of those platforms, and use that referral link below because it's free money for you. If you learned anything from this video, make sure you hit the subscribe button and hit the notification bell so you get notified each and every Friday. I post helpful biz tips and tricks on personal finances, real estate, and stock market investing. Make sure you also hit the like button if you enjoyed this video content, and also find me on Twitter where I talk about stocks and real estate daily. You can also find me on Instagram now, where I also post more helpful biz tips and tricks in a smaller format on Instagram as well. Thank you guys so much for watching again, and happy hunting for your portfolio.